Good morning everyone and welcome to another RF crypto video. Today's markets have barely moved. They've only gone up by 0.7% and the global crypto market cap is now standing at 1.87 trillion. The mini bull run that we had for the last 1 or 2 weeks is now officially over. I mean, it's been officially over since yesterday, but the consolidation that's going on today in the market, whereby prices are trading laterally, just confirms that the bull run is over and we're in a period of consolidation before we see a break, whether up or down. So the whole market is a mix and match between prices going up and prices going down. So if you can see here, we see a lot of greens, but we also see a lot of reds. And this is due to the fact that cryptocurrencies have factors of their own that causes them to move in either direction, up or down, which is independent from Bitcoin and the stock market or the general crypto market itself. So the general crypto market might move in one direction, but the individual cryptos might move in another direction. One good example that I was looking at is Shiba Inu. While the market has barely moved, Shiba Inu has gone up by almost 21%. We'll speak a little bit about Shiba Inu later, but it is important to note that there is increasing decoupling going on where tokens are becoming more independent of the top 5 or top 10 coins and the general crypto market itself. Looking at the Bitcoin chart, there is nothing much to say. Bitcoin is trading right at the edge of the $40,000 support level. Officially now it's trading between 40 and 42,000, with 40,000 being the support level and 42,000 being the resistance level. And the price tried to break below the $40,000 support level on its way to the $38,000 level. However, the bulls got back into it. They pushed the prices up and now it's trading in this band. Having a look at leverage, it's very surprising that leverage is at an absolute all-time high. Prices have gone down, but leverage has gone up. And this is a sign that people are now taking the opposite view of the market because their initial strategy of following the market didn't work. So if you look at here, leverage was an all-time high and the price has dropped. So a lot of leverage positions were liquidated because a lot of positions were long, which means that they expected the prices to go up. And when they went down, it meant that their positions got closed because they were in such a loss-making position that the exchanges had to forcefully close their transactions and liquidate them, leaving them with zero. However, even though the price keeps on dropping, leverage has gone up. I think what this means is a lot of people are in the short position, betting on that the prices will go down, and this is because the meme coins are rallying. And when meme coins such as Dogecoin and Shiba Inu rallies, it means that a bull market is ending and a bear market is approaching. It is common knowledge, but it doesn't mean that it's the law. There are factors that cause Shiba Inu to go up, so if that's the case, then this is a bit misguided. But it is very, very interesting to see the leverage ratio at all-time highs. What this means is that any rise or any drop in the price of Bitcoin and in the general crypto market itself will be amplified by an increased amount due to this high leverage amount. Shiba Inu jumps 20% following Robinhood's listing. Shiba Inu, which is a meme coin, today jumped in price by 20%, which is a spike seemingly caused by Robinhood today adding support for the asset. So Robinhood is a popular stock and cryptocurrency app that lets anyone get involved in trading. So it's pretty open. It has less KYC rules than other exchanges, and it's a lot of people's preferred exchange. Today, they added support not only for SHIB, but for Solana, Polygon, and Compound. So they're getting a wide variety of their cryptocurrencies in order for people to have access to them. And because Robinhood is quite big in the crypto industry and quite respected, the fact that they added Shiba Inu to their platform caused this rally because people now are aping into Shiba, as it gives millions of new customers access to the Shiba Inu coin. So if there's increased demand by this millions of people, these people who bought early at this level when Robinhood announced that Shiba would be listed can profit from an even increased price when the demand picks up once people in Robinhood start buying SHIB. SHIB is also the best performing crypto in the past 24 hours. And it's the 15th biggest digital asset by market cap, now standing at $14.6 billion. So just think about it, a meme coin is worth $14.6 billion. And I mean, as a meme coin though, it doesn't have much utility. you can't really spend SHIB anywhere, and it's not really clear why it was created. Maybe it was a joke, but it has a big community, it has a big backing, and that's why it didn't die out yet, and that's why it's still hanging on in the top 20 coins. And because it is a meme coin with no real utility, it's a lot more volatile than other assets. Because if it doesn't have utility, it's more speculative than anything else. So if the market goes in a certain direction and there's nothing affecting SHIB, the price of SHIB will go in that same direction of the market, but with an amplified effect. So if the market goes down by 5%, SHIB might see drops of 15%. On other SHIB news, speculative SHIB market sees increased HODLing. The number of hodlers or addresses holding the Dogecoin killer, which SHIB is normally named, for more than a year has jumped by 1,900% to about 3,750 since late January. And the number of traders or addresses holding for less than 1 month, which is the ultra short term, has declined by 38%. So the slight tilt towards HODLing is perhaps welcome development for the cryptocurrency, which is often criticized from being a gambler's darling. And what this means is that people usually see SHIB as a speculative coin, as playing in the casino, because the prices just spike up and spike down and people make money gambling on the price of it because it has no real utility. So a lot of people HODLing means that maybe they see some future development coming into SHIB in terms of utility, and that's why they're holding it for the long term, because they believe in the product and they believe that it will make great strides and the price will keep on going up. And as I said before, it is speculative, and the fact that the number of hodlers has increased is good for bulls. The balance held by these addresses still count for less than 5% of the total circulating supply of staggering 549 trillion coins. Cruisers or addresses with a holding period of 1 to 12 months, which is short term, own more than 93% of the supply, and this has given it the reputation of being dominated by speculators. So it's a long way before SHIB can shed its reputation as a speculative coin or as a speculative cryptocurrency, but it's making good strides in the sense that we have seen a lot more people HODLing into it, and there might be future development for the cryptocurrency in terms of utility, since it's backed by Vitalik, who is obviously the co-founder of Ethereum, the second largest cryptocurrency. So Mozilla will only accept proof-of-stake crypto donations and will reject all the proof-of-work donations. They're attempting to appease its environmentally conscious community by only accepting proof-of-stake crypto donations, and this is because proof-of-work requires a lot of electricity in order to fuel the computers and the servers that are used to calculate and solve the problems that are required to be solved in order to unlock a block and get the reward of 6.125 Bitcoin, which is what you get when you solve a computational problem. The company initially halted all crypto donations in January, but has now opened them back up after a review period to assess community sentiments and to conduct research on crypto energy usage. And they chose to only accept proof of stake because they only use less than 1% as much electricity as Bitcoin. Basically, their ethos is that proof of work cryptos can significantly increase our greenhouse gases footprint due to their energy intensive nature. So now they have banned Bitcoin and they have banned Ethereum, but I think Ethereum will be supported after the merge when Ethereum 2.0 comes online, switching it from a proof of work to a proof of stake protocol. So the director of digital strategy at American investment firm Van Eck Gabor Gerbax has harshly criticized Mozilla's decision to block Bitcoin donations. We must take this with a grain of salt because remember, Van Eck is one of the 4 companies that has a Bitcoin futures ETF in the market, so they can only benefit from the price of Bitcoin going up and from increased adoption. So anything which is bad news relating to Bitcoin is obviously bad for Van Eck. So Van Eck's Gabor Gerbax is saying that your ESG policies are misguided and virtue signaling in nature. Get your facts straight. Bitcoin mining is one of the greenest industries out there. I bet your current operations are much worse for the environment than Bitcoin. And it is true that Bitcoin consumes about 204.5 terawatt hours of energy according to data from blockchain researchers at Digiconomics, which is a great amount. It rivals some countries' electricity consumption actually. But the actual effect that this electricity consumption has on the climate is much more contested. Proponents contest that miners that secure the network are helping to strengthen energy grids and can improve carbon efficiency, while operations themselves are increasingly switching to renewable energy. And this is true. I mean, I think more than half of all Bitcoin operations are now running on renewable energy, which means that they don't really release greenhouse gases per se. For example, crypto storage company Blockstream and Jack Dorsey's Bitcoin development firm Block Inc. announced on the 8th of April that they would work with Elon Musk's Tesla to build a solar-powered Bitcoin mining facility in Texas, which is the new hotbed of clean energy mining operations. So we see big names going into Bitcoin mining and choosing to mine it cleanly. And this means that a large proportion of the Bitcoin that will be mined will increasingly be derived from that of clean energy. So yeah, I think Mozilla might be virtual signaling. It might be wanting to get some appeasement from its community and be seen as green, because the facts state that Bitcoin is becoming greener, but they might have their own reasons for it, and they might have done their own research for it. Finally, Bitcoin mining competition soars despite declining on-chain activity. So Bitcoin's rising hash power flies in the face of its bear market level trading activity. So there has been some indicators that on-chain activity in terms of Bitcoin has been declining. A lot of investors are profit-taking during this recent rally, which brings the prices down because profit-taking entails selling Bitcoin. Also, demand for Bitcoin and influx of new users still remains low, creating a lack of evidence of strong growth or recovery. Also, the transaction count is also relatively low, now just 225,000 per day. So all of these factors are telling us that Bitcoin isn't doing so well in terms of growth and recovery, and things are quite stagnated at the moment. And theoretically, this would push down incentives for mining Bitcoin because miners earn less profit per block, because if the price is lower, the amounts that they get for each block mined will obviously be less. Despite this, competition in the industry appears to be rising, with mining difficulty reaching an all-time high. But it is important to note that for each block that they mine, they get about $250,000, which isn't a little amount. And there has been increasing competition between these mining firms, and obviously they want to increase their revenue, which won't necessarily increase their profit margins, but it will increase their total profits. So it only makes sense for them to ramp up operations and try to mine as much Bitcoin as they can before the halving of the rewards in 2024, which will go from 6.25 to 3.125. And that's it for today's video. Thank you very much for watching. If you enjoyed the video, please leave a like, hit the subscribe button, and share this video with your family and friends. Invest wisely, and cheers.